Good morning. It's Harvey Jackson from Exceed Grain Marketing. Just going to touch on the news going up to this rail strike and how it's ended as well. First off, canola is up 6.5. Rapeseed is up as well. Soybean oil is up a half a penny. Crude is up a little wee bit, and soybeans up 2.5 to 2 cents. And wheats are down following its pretty bad day yesterday. And the Canadian dollar is up a little wee bit more as well. So Canada orders a third party to mediate the railways, and you can see here that under the Labour Code, he's ordered a binding arbitration, which involves a third party, which is the Canadian Industrial Relations Board, to end the strike. And what it will entail, as well as putting them back to work. And so there's the union and CN are still not getting along. Even though there's been some proposals out there, which when we look at these, probably as a general, it you go, well, they can't be too bad off, right? But either way, it would have been crippling for the economy no matter what we were looking at here. Pro Farmer actually showed Minnesota soybean data actually pretty good, and yet the corn data is actually lower than last year, and because of wet moisture is probably the biggest factor, as I pointed out yesterday. Iowa had some fantastic yields, and if we were looking at the differences between StatsCan or the USDA and state by state observations put out by Pro Farmer, none of them are really close. But you got to realize that they don't cover the whole province as well, or the whole state. Yeah, I'm getting my geography's all mixed up here. But anyway, yeah. So but in general, I think soybeans are probably looking for a banner year, no matter what we do, at least by the state by state observations from Pro Farmer. So I'm going to do something a little different. Cover wheat. Wheat had a bad day, but if we look at corn, it didn't have the same bad day. It didn't retrace to the lower levels. You see, wheat actually broke through and continues to go through its support level. So yeah, it's just a brutal thing for the wheat growers out there for sure. Milling wheat, still not back at full retracement where it had traded back in March, but the trend is that it's definitely on its slide as well. So world wheat values are very likely or quite under some pressure here. Red winter, same thing. And then if you drill in a little bit deeper and you just look at the like a 5 minute chart, and this is where the base was there before, and you can see that we're still in a slide. Hopefully we can get a little bit of a recovery here, but I still expect to see a little bit more pressure from next week's report from StatsCan that has the near infrared imagery for July, very likely pointing out some pretty good yields. Spring wheat spread. This is where we had entered. We had exited up here and choppy. I'm still wondering if we're going to have enough quality wheat in Canada now that we're not talking about the strike. We're just going to be talking about what's going on here in Canada, and there potentially could be some lighter wheat and maybe some disease concerns changing quality as well, especially in the Manitoba region where there was a little bit more possibility of more Fusarium head blight. Canola actually maintained support. We had a little bit of choppy trade. Now we're trying to create a bit of a bottom here. And if we drill in a little bit deeper, you can see that we have a little bit of green on the screen as we speak, up nearly $10. And that's now putting us at that 10-day moving average. The 10-day moving average is pretty important. If we can get above it and start trading, then we'll start looking for some of these other technical indicators that would actually give us some upward movement. But I would still state that there's a likelihood of some pressure from the StatsCan again for the USDA or for the canola and wheat production area in Western Canada from the near infrared. And yet I do believe a lot of traders are trading bigger yields as well. So if we look at this, just going into a 5 minute chart, and you can see just how that market has traded for the last few days, and you can see how it's choppy as well. Just drilling in and in looking at supporting veg oil. So here, soybean oil has actually created a bottom a while back, and still it was down a little bit yesterday, but if it looks like we are trading at and above the 10-day moving average, which is a positive signal if we can maintain and hold above it. Soybeans, same thing. It actually traded down off the 10-day moving average, and you need a few consecutive days above. But so far, the soybeans have held its previous week and earlier on this week's values. Rapeseed holding on to 61.8, just above that value on the downward move, and hopefully we can still hold on to that. And just drilling in a little bit closer to what that looks like, and yeah, it's still holding on, but barely. Palm oil actually had some really good last few days, but it looks like we're going to get back into this middle of the trading range. We'll have to see, see if this trend will continue. And that's all I have for you today.